Let's move on and let's also welcome on board Karan Tarani, Senior VP at Elara Securities. He is here with us to discuss what's really been happening in the Alcobev industry and what are the trends that are shaping up right now. Hi Karan, good to be speaking with you. First up, the latest that we understand, Karan, is the recent UK FTA deal. Give us some sense there that how this can actually give a push to the Indian industry and the Indian players. What implications could it have on the prices?
Hi, good morning. I think in terms of UK FTA, this is going to have a positive impact in terms of volume growth. For the luxury segment, there could be an MRP correction of anywhere between 15 to 20% as far as entry-level Scotch and high-end Scotch is concerned. Volume growth in the luxury segment has been in the range of 30 odd percent in terms of CAGR over the last 3 years. This could accelerate towards 40% plus given this price correction that we will see. Indian brands could see a negative impact of this. If you talk about the Indian luxury brands, if you talk about the upper prestige segment, which are there, this could be a dampener for those Indian brands. So they might have to, kind of undercut in terms of pricing or get pricing on par with these Scotch companies. Market in terms of market size of Scotch is a very small market, only about 6 million cases versus the 300 million IMFL cases that we have in terms of whiskey for India. So it's a very small market. Growth rates obviously have been very good and healthy, but because of UK FTA, you could see further acceleration as far as growth is concerned.
The whole curve or the whole process would take a couple of years, right? It's not going to happen tomorrow. When I say the implementation of duty, right? So what would be the timeline, and will the timeline have the stocks run up in anticipation of implementation, or they've not run up?
I think if you look at the stocks, they have largely run up. If you look at something like United Spirits, it's moved up by 14 to 15% over the last 2 months. This was in anticipation of UK FTA largely because they will be the biggest beneficiary. You could see acceleration in their volume growth from a 5 to 6% CAGR right now towards the 8 to 9% kind of a CAGR because of UK FTA. So stock valuations have run up. In terms of implementation timelines, we still await the detailed document in terms of how things are going to pan out. But yes, anywhere between 12 to 18 months is what this could take. So we could pencil in that this positive impact on volume growth for companies like United Spirits will come in the second half of FY27.
Alco Beverage or Alcobev as we now call them, these stocks have not lived up to their reputation. If you do a dipstick, you would say alcohol consumption in India is increasing. It is growing at higher than GDP. But frankly, if I keep Radico Khaitan aside and if I look at other alcohol stocks, either stocks have been volatile or growth has been low.
Yes, there have been reasons for that. So in the case of United Spirits and United Breweries, both these are large MNC companies. What has happened here is that both these companies are trying to focus on the premiumization play, which is the luxury portfolio for United Spirits. In the case of United Breweries, the focus is more in terms of the premium beer, which is again, more smaller in terms of market size. So what has happened for them is that because a large part of their volumes still comes from the regular segment or from the low prestige or the entry level luxury segment, there the volume growth has not been extremely attractive. What has also happened is that the competitive intensity from the local players has increased significantly in both the spirits and the beer category. In beer, we've seen entry of many local players going aggressive like Soam Distilleries. In the case of spirits, we've seen many regional brands coming in. Radico also is doing well in spirits and the whiskey segment. So the large part of the volumes with these companies generate has not been able to grow in a very big manner. So that's been the concern for these companies, and that's why valuations always appear expensive, and we haven't seen any kind of a big upgrade in terms of numbers. As far as profitability is concerned, United Spirits execution has been top notch. They were at 15% core Alcobev EBITDA margin, which has moved to 17% despite inflationary headwinds. But in the case of United Breweries, margins has also been a pressure because they continue to invest in the premium beer category and they continue to kind of gain market share over there. So new bottle cost, marketing cost, promotion schemes has led to lower margins for a UBL, and which is why they have been under more pressure as compared to United Spirits.
Karan, in terms of the big trends that are shaping up, I was just reading a report which highlights that the India's Gen Z, or rather the new generation, is drinking less but drinking better. And in terms of Gen Zs versus millennials, we are seeing that the millennials are still having that urge to drink. Give us some sense on this front. Have you done any reading on this, and how are you seeing the trend shaping up? And in that also, Karan, there was a bifurcation between the kind of liquor that they are preferring right now.
So it's very clear this is not only an Indian phenomena. This is a global trend that the consumers who are the young age in the group of 18 to 35 age group, they are obviously drinking less, but they are drinking expensive. They're drinking more quality. This is a trend which is quite visible in UK as well, and this is quite visible in terms of the growth rate of the various segments that you see. So let's take the example of the whiskey segment. If you start off with the regular segment category, wherein the pricing of a bottle is anywhere between 300 to 400 rupees, that segment is seeing a flattish growth, a growth of not more than 1 to 2%. As you keep moving ahead in terms of the pricing, in terms of curve, in terms of premiumization play, the categories which are priced at 1500, 2000 kind of price points, the base is obviously small, but the growth is very sharp over there. It's more than 20% in terms of volume growth. So it is a clear premiumization trend that we are seeing. Now, this premiumization trend has not come in the last 1 to 2 years. This trend has been there since the last 5 to 7 years. But it has only accelerated in the last 3 years because of the shift in consumption, which we spoke about in terms of youth wanting to prefer quality, over quantity. And the second thing is that even in the earlier past, the luxury segment was growing at 15-20%, but now the growth rates have accelerated. But that time there was some respite for the regular segment. The regular segment until about 3 to 5 years back was growing anywhere in the range of 3 to 4%. What we've seen right now is that some categories within the regular segment, or rather some brands, have even seen a decline in terms of volume. So this is an alarming sign. This means that the trend towards premiumization is only accelerating over the last 2 years because of the consumer habit shifting.
Karan, since we have you with us, let me just also touch upon what's been happening within the multiplex industry, because with the tensions going across the border, the consumption is seen, and such consumption is seen to be taking a bit of a hit. But give us your understanding there, because some reports are suggesting that the film industry is staring at an estimated loss of close to 200 crores. Even if they happen to lose some days of business, that's indeed impacting, and the sentiment is getting impacted. What's your understanding, Karan?
So I think from a war standpoint, of course, we would have seen a negative impact in terms of occupancy levels for at least about 10 to 15 days because of what was going on in the last 10 days in terms of an uncertain environment. But I think that's not a big reason to be blamed here. I think the bigger reason to be blamed here is the content, which has not been up to the mark. Obviously, this year we could see some respite in terms of Hindi box office because this year is all about franchise-led films. We have seen the likes of Raid 2, Kesari 2. We are going to see films, like Jolly LLB 3, Houseful 5, many other films which are going to come in, which are franchise-led film, Border 2. So I think here we have to blame two things. One is, of course, the change in content. How can we change the content to suit the audience taste and consumption pattern? And second, of course, is the audience, right? So the audience has also become quite demanding with the advent of OTT, with so much of variety of content on OTT platforms. And the audience just doesn't want to watch run-the-mill content. They want to watch differentiated content. They want to actually pay for content which is worth their time, effort, and money. So I think these are two reasons to be blamed here. And I think this year as well for CY25, you see on a base versus last year, you could see Hindi box office doing tad better in terms of growth. But structurally, the concerns remain. We are still not able to breach pre-COVID levels by a very big margin. Occupancy levels are still quite subdued. Only large budget films are doing very well. Small, medium budget films are not doing well even right now. But the only respite in CY25 I see will be the Hollywood content. This year, we have got at least 8 to 12 large Hollywood franchise films which are lined up. Mission Impossible, Superman, Jurassic Park, Avatar 3 is coming towards December. So Hollywood has been quite subdued over the last 2 years because of Writer Association strike. So this is one of the first year where after June we'll see a pickup in terms of Hollywood. And Hollywood contribution for the exhibitors is around 25 to 30% in terms of revenue. So if Hollywood does pick up, you will see some bit of respite there. But I think Hindi is still like a struggle right now in the near term.
Appreciate that take. It's going to be a fun weekend for us. Lots of new movies hitting the silver screen. But let's shift focus. Also talk to us about the consumer discretionary segment. Since we have you with here, we'll do a quick question on that as well. Now, for consumer discretionary, results have been pretty decent. What's your take on the quarter gone by? Which companies are standing out to you? And within the consumer discretionary compounding stories, where are you bullish?
I think in terms of compounding stories, we have to look at this. Firstly, I look at the internet consumption names, wherein we are bullish on companies like Eternal because of good execution. Whatever is happening in terms of Eternal valuations coming off over the last 2 to 3 months was primarily because of competitive intensity from Zepto, which may see a cool off now because we don't see price wars increasing from here on. E-commerce players are not going to be a big threat. I think there have been a lot of senior level exits in Flipkart as per media reports. And if one were to go by that, even e-commerce may not scale up in a big way in quick commerce. So I think you will see respite for Eternal. I think, and even going ahead, once things cool off, Eternal will see better compounding growth rate as compared to peers because of being market leader and good execution. So that's one topic that we have in the internet space. Second name in the consumption pack would be Radico Khaitan. Of course, in the Alcobev industry, as you clearly see, in terms of share price performance, in terms of growth rates, in terms of profitability, they've been top notch. So they continue to innovate well. They're a local company. They are not, driven by stringent measures as compared to MNC companies, which are more compliance led, and things get delayed over there in terms of strategy and execution. So they've been top notch over there. They've got the positive impact of backward integration, so no negative impact in terms of ENA ethanol blending policy as well. So you could see 25-30% earnings figure for Radico, which is far superior as compared to other Alcobev companies, which are in the range of 18-20%. So you could see upside there as well. But Radico is premium valuations right now. It's at about 48 times F27. But going ahead, you will see a respite for Radico as well. It's a good compounding story to hold. Third pick that we like in the consumer discretionary space is Trent. I think even over here, the concerns are overdone. If the growth rates for Trent sustain at 30%, which seems like a likelihood right now, despite increased competitive intensity because of the moat in Zudio that they have, we believe Trent also will see re-rating in terms of valuations in a gradual manner. And if you look at the margins as well, margins for Trent have been good despite the inflationary environment as far as the cost of goods and labor and the issues which are there. So I think Trent is also one good pick. So we like Trent, Radico, and Eternal. These are three good names in the consumer discretionary space that we like and we prefer over medium to long-term perspective.
Karan, really appreciate you taking the time out and speaking with us and giving us a sense what's really shaping up within the consumption basket.
If you like this video, then like, share and subscribe to ET Now.